Oh my God, the stock market has crashed. I did a video last week talking about the stock market is crashing, and I did get a few comments. Basically, what I said is, "What are you going to do?" And then I told you what I was doing. So, someone in my comment named Lisa commented, and she said, "You assume." I'm gonna go over there. You're assuming everyone has time to write this out, and that's not the case. And I responded, "What's the rush? If you don't have time to write out a crash, you shouldn't invest." She responded, "You're missing the point. I'm talking about the older folks whose 401k have been decimated." Older folks, and I responded, older folks 401k is supposed to be already adjusted for crashes and retirements. No older folks 401k should be 100% stocks, and they are not handling 401k by themselves. So the advisors have already started to adjust their 401k as they age. So, what exactly is your point? And again, the market goes up and down. She responded, "You are being highly unrealistic, as you can clearly see by the current public sentiments, aka MSNBC and CNN, aka the Crying Nigger Network. Current public sentiments about the economy plus Orange Man has caused futures to crash, and as increasing costs of nearly all everyday goodies people would need not only money upfront to invest, which they don't have because most people live paycheck to paycheck, and tune to ride out the current situation when we are on the point of pres- precipice of a recession." I responded, "I'm not being unrealistic. I can tell you're not knowledgeable of 401k investment. Go and ask any financial advisor if an old person who is near retirement should have 100% stocks. Also, ask them if their 401k is not set up to adjust as they age. Most people go in, do so in a 401k. Those of us who invest outside of a 401k are knowledgeable to have a little money on the side when the market goes down." You could finish reading that. But I realize Lisa is not knowledgeable of 401k. She's been listening to MSNBC and CNN Crying Nigger Network, because I'm like, 401k has a fund manager. Your fund manager manages your 401k and make adjustment based on your age. Perfect example. I didn't even think of my husband. His 401k fund manager started making adjustments a few years ago. I started making adjustments in 2023. Excuse me. I knew Trump was going to win the election in 2024. So you know what I did? I started rolling over my husband's 401k, waiting for this crash so I can convert, but also because I knew the Trump tax cuts were going to be continued. So this is the time to convert his 401k. Another perfect example, my 457 has a fund manager. I call him Mr. Lincoln. He comes to the job 3, 4, 5 times a year. And last year, I told Mr. Lincoln, I'm retiring in 7 years. You know what Mr. Lincoln did? He started making adjustments to my 457, as a matter of fact, most of my 457 was in the S&P 500. Well, he adjusted it to 25%. So the when the crash happened, I didn't take a big hit in my 401k because my fund manager last year started making adjustments for my retirement. I have another example. I have a college fund for little Michael. I was shocked in 2020 when people, the mamas, was crying that they lost all their kids' money. And I'm like, what? First of all, a 401, a 529, most 529 are handled by a fund manager. And the fund manager knows to take out the 529 at least 2 years before the kid is ready for college. So when Michael is 16 years old, I have transferred his 401k onto my control because you could go in and adjust it to advisor control or self control. I change it to self control. I know when little Michael is 16, I need to cash out his 529 because if a crash happens in the next 2 years, I don't have time for it to recover. So 529 fund manager already knows that. As a matter of fact, half of my son's 529 has a graduation date. And so every year, his half of his 529 adjusts to his graduation date. So I realized Lisa didn't know what she was talking about. Because if you're retiring this year, your fund manager has already made those adjustments. And I'm not talking about those people because I can't go put extra money in my 457. That's not how a 457 is set up. As a matter of fact, Mr. Lincoln was here at my job in February 19th, I think. And I increased my 457 amount, and it hasn't hit yet because it takes 30 days to hit. So maybe this pay coming up this week, I will see the adjustment I made for him to take out more. So I realized Lisa didn't know what she's talking about. I can't call Mr. Lincoln and say, Mr. Lincoln, I got $10,000 in my savings account. I want to put in my 457. That is not how a 457, a 401k, or a 403b is set up, Lisa. So the people I am talking to on my channel are people who are interested in investing. You are investing on your own, right? I'm investing on my own. I'm investing in my 401k. I'm investing in my Roth IRA. I checked my Roth IRA yesterday. I checked my my husband's Roth IRA yesterday, and we were not hit big because for Roth IRA, we are in safety, a lot of safety. So the people I am talking to are people who, like myself, who are self-investing. You're doing a little something extra. You're trying to learn a little something extra. You have a taxable account that you're investing in yourself. So for those people who are like myself, who you're investing yourself, investing, if you're listening to investing videos and reading investing book, you know to have a little money set aside so if the market goes down, you can jump in. When the market went down on Thursday, 5,000 in. Friday, 5,000. Today, we gonna see what I'm gonna do today. But I'm not talking to people who's in 401k, 457, because you have a manager who is managing your money. And if you're retiring in the next couple of years, that fund manager has already made adjustments. So if there is a crash, you're not hurting for nothing. And for those people who have retired, I have a video for you. This is my favorite couple. on YouTube. I listen to them almost every day. Our Rich Journey. Love, 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 love this couple. I listen to them. Like I said, every time they do a video, I listen to it. I'm gonna have to give them a donation for this video. So let's see what this couple retired in their 30s. So let's see what they have to say about if you just retired or money on the side.
Is the stock market on its way to a huge crash? This is the question that is on the minds of so many people after all that is going on in the stock market. And so in order to answer that question, we have to get a couple things straight. The first thing is that crashes are bound to happen. It's just a matter of time.
Right. And y'all know I have to talk through it so I don't get a copyright strike, right? Those of us who are investing, we know crashes has to happen. It's just a matter of time. And that's why I kept saying to Lisa, markets go up and down. If you're freaking out, something's not right. You're not doing something right or something's not right. You don't have an understanding something.
Now, this fact can consume a lot of investors, especially investors that just start putting money in the market because they're afraid they're going to put their money in and then immediately the stock market crashes. But if you are a long-term investor, you may have gone through moments like this. And so you know exactly how to handle the inevitable crashes. But for
right, long-term investors. I'm a long-term investor. I've been investing since I was 25. I haven't touched a penny from my investments from 2025. From when I was 25. I'll be 48 in October. Long term. Okay?
anyone that is investing in the stock market, whenever crashes happen, a good investor is always excited about them happening while they are building wealth, while they are starting to.
A good investor are always excited when crashes happen while we are building wealth. I'll give another example. For example, let's say my husband for a 1K, let's say he had $100,000 in, and now that $100,000 is 80,000. Boo boo. I'm converting that 80, probably not at one time, at 80 and pay taxes on 80 versus 100.
To put money in the market. Because it is at that point when crashes are happening that while you are putting money in, you are gaining wealth because of the eventual rebound. Now, on the other hand, if you are in the phase where you are living off of your portfolio in what we call the drawdown phase, where you put money to live off of every day, a crash can be a very scary thing. You must have a backup plan. So this is the first thing that we need to get straight.
Right. Must have a backup plan. Lisa, there's a backup plan. What's our backup plan going to be? I am saving for 3 years of emergency fund. So that means when my husband and I retire, we don't have to touch our retirement money for 3 years because we'll have 3 years of retirement fund. Excuse me, but this is not something I just thought about yesterday. This is why you must have a life plan. Those are the people I'm talking to. I'm not talking about emotional people. I'm not talking about people who wake up today and think you're 50 and you're thinking about, oh my God, what I'm going to do for retirement. You cannot be helped. I can't help you. I'm not talking to you.
Second thing is that historically, no one has been able to predict a crash. Now, there have been certain investors that have been credited with predicting, for example, the 2008 crash. But if you look at those same investors, they're always throwing out different dates of different crashes that are expected to come, and they never come. So if
right, so nobody can predict a crash. So that is why your fund managers make adjustments to your account based on your age. I am 47 years old last year. I told Mr. Lincoln I'm retiring in 7 years. And he said, okay, let's start to tweak your account for your retirement. Same thing with my husband. Little Michael will be graduating high school at 18, going to college probably 19 because his birthday's late. At 16, you cash out because if the market crash is going to take 2 years to recoup that money. And this is why half of my son's college fund is in an age adjustment fund. And every year, based on his age, it automatically adjusts to his age, to graduation. Why? Nobody can predict a crash. So you don't just wake up today and say, oh, I'm ready to retire today. No, not with your 401k, 427, 403b. Your fund manager already started making adjustments right around 50 years old. As a matter of fact, I got a letter in the mail. Oh, you're Miss Thompson, you're almost 50 years old. We need to talk about your retirement. First, I threw the letter because I'm like, okay, I'm 47. I'm not, but you know what I say about 47, you're really 50. Right, because they know based on your age, they need to make an adjustment because nobody can predict a crash. So because no one can predict a crash, we will make adjustment based on your age. So if somebody's in a 401k, 457, 403b, and they're retiring this year and their money's still in the stock market, fire your financial advisor and sue his firm because he should have already started making adjustments to your retirement 5 years ago. This is why my advisor started making adjustment last year because I'll be retiring at 52. So when they sent the letter and said, Ms. Thompson, we need to talk about your retirement because you're going to be 50 years old soon. Well, it was right on time because when the fund manager came last year, I said, listen, I'm retiring in 7 years. They said, great, let's start making the tweaks. Okay. That's why I was like, what is she talking about? What is she talking about?
If you are basing your investment plan off of news of certain predictions about when the crash is going to happen, you are basing your plan off of mere speculation.
The third point is that stock market crashes can happen.
And this is why we, those of us who are individually investing, you have a little bit of money on the side. So if you don't have money on the side, this is not for you. If you're just investing in your 401k, 403b, 407, this is not for you. Because like I said, I cannot call Mr. Lincoln. I could email Mr. Lincoln today and say, Mr. Lincoln, I have $10,000 to put in my 457, and he could not take that money because that is not how a 457 is set up. That money has to come out of my paycheck. But I can have $10,000 on the side and put it in my taxable account that I'm handling and I'm investing in myself.
Happen very fast or they can happen very slow. And I'll give you a great example of this. March of 2020, we experienced one of the fastest crashes in the history of the stock market. Over a 22-day trading period, the stock market lost more than 30% of its value. Now that is considered a super fast crash. On the other hand, here's an example of a super long crash.
Great point. And that's what I shared about how when my husband 401k statements came and I was looking, I was like, okay. And then I got hit in my face with a big negative 30K. And I was like, I can't look at it. I couldn't. But guess what? Nothing changed. We didn't do anything. The only thing changed was my husband increased his 401k. I increased my 457. And 2-3 years later, when I looked at our statements, we had stepped over the line in a whole new financial zone, milestone. What if we had stopped? What if we had, I'm going to take my money out? No, we just kept on. Okay, it's okay. Put that money in. put that money in, because we know every money we're putting in, it's buying the stocks at cheaper prices. So you're going to look up one day and
January 11, 1973, when the S&P 500 took 373 days to fall 30%. 373 days to fall 30%. You don't even realize the crash is happening at that point. So on one end of the spectrum, you have a crash that takes 22 trading days. On the other hand, you have one that took 373 trading days.
And we have said this before, but it is so important to mention that historically, the stock market has always recovered from a crash. Now, I want to be clear about this because we talk about the stock market as a whole recovering. If you're investing in individual stocks, it's very possible that those individual companies can fall out, they can go bankrupt, and they may never recover. But if you are investing in the total stock market as a whole, for example, a total stock market index fund, that type of investment has always gone up in the.
So the stock market always recover. Ta-da! It always recover. And of course, if you're investing in individual stocks, like she said, Christina said, some of them might never recover, but over here, I've taught most of your money should be in index funds. Most of our money are in index funds. So I kind of knew Lisa she didn't know what she was talking about. She didn't know. That's why I had to say, girl, stop. Okay, here's the old-time guru, Susie Orman. I actually got most of my financial education from Susie Orman when I was in college, when I was fresh out of college. Put that 401k in. I would listen to Susie on the radio, on Oprah when she came on. I have her books. Love her. Now, let me just be clear here. I'm talking with financial education. That's all I'm talking about when it comes to Susie. Financial education. Okay. Here's Susie. Hey, Susie.
Hey, everybody. Susie Orman here. Now, if you are freaking out about the market right now, stay with me because I have a lot to tell you. So here's what I want you to understand. There's not an important time than right now for you to not make moves that are going to hurt you. Short-term moves will hurt your long-term financial plans. Now, I know these markets are going down and down and down. And as I'm recording this, the markets are down seriously again. I can't even believe it. However, you have to ask yourself why. Why on April 4th, 2025, is the market going down more than it went down on April 3rd and so forth last week? And here is the reason why. Now, you know that we have tariffs that have been put in place. But what you may not know, and the reason why the market is going down so much today, is China did not like what we did, not at all. So they put on tariffs. And the investment community does not like that they retaliated. They don't like it at all. So the markets are going down. We're down about 3.5%, 4% on the Standard & Poor's 500, the Dow Jones Industrial Average, and the NASDAQ. So what should you be doing right now?
Right. What should you be doing right now? You need to have a life plan, an investment plan, a money plan, a health plan, a will, a trust fund plan. You need to live your life based on a plan. Okay? Go ahead, Susie.
Most of you, if you know me, you know I've told you forever, money that you need within 5 years is not money that belongs in the stock market.
Say it again, Susie. Let's rewind what Susie said. Money you need, she said 5 years. My investor said 3 years.
That you need within 5 years is not money that belongs in the stock market. So if you have money that you needed right away, of course you're freaking out. But if you have been following me for all these years, then you should be okay. What you need to understand right here and right now is a lot of you are looking and you're going, oh, the market's down. I'm going to buy now. I'm buying at the bottom. You are not to be bottom fishing here.
And bottom fishing means you're only buying when the market is allegedly down. And what you're supposed to be doing is dollar cost averaging in. And if you have a little extra money on the side, throw it in there. Okay? Listen to our Rich Journey. Finish listening to that video and they'll tell you that.
This market that we have right now reminds me of the market in 2022. Do you remember? When everything kept going down and down and down. You will have plenty of time to get back in this market if it does turn around. But this is not a market that is all of a sudden going to turn around and go straight up. Do you hear me again?
So the market, Lisa, the market doesn't go straight up. That's why I keep saying the market goes up and down. What are you talking about? It doesn't go straight. It's like people want it to go straight up and never comes down. But that's not how the market goes, right? It's a wavelength. Come on, Susie.
You need to get is, hey, if you're dollar cost averaging right now, all right, you can go in, but with little amounts of money. Have you ever heard the phrase, don't catch a falling knife? Well, guess what? This knife is a falling, and I don't think it's going to turn around until some decision is made with these tariffs. Now,
okay.
Other things are happening out there just besides the markets going down. You have to look at the VIX.
Okay, you can finish listening to Susie. So here's Susie's telling us money you need in 5 years should not be in the stock market. But your fund manager who controls your 401k, 457, 453 knows that. Okay, here's another brother I listened to.
According to a Hartford Fund study, if you miss the 10 best days in a stock market in any 30-year period, you would cut your returns in that 30 years by 50%. Market dips are normal. They happen. They're a part of the investing game.
Right.
Just like if you was a basketball player and you miss a couple of shots in a row, maybe you miss 4 or 5 shots in a row. That's a part of the game.
Right.
You don't quit and leave the game and say, I'm done. I'm taking my ball and going home because you missed 4 or 5 shots in a row. It's a part of the game. Just like the stock market going down and you losing a little bit of money is a normal part of the stock market game. So when the market goes down, don't trip and stay in the game. Guys, the stock market is falling fast. But if you're a long-term investor, this is exactly the time when you need to stay sharp. You need to stay focused and not be panicking at this time. Now, in this video, I'm going to give you some actionable steps, some things that you can really actually put into practice and do right now to grow.
Okay, so you can finish listening to him. Oh my God, did I give him credit? Smart money, bro. You can finish listening to him. So you hear, do not panic. Those of us who are invested on our own, have a little something on the side, dollar cost averaging, right? That's why I didn't put everything in on the first day. I didn't put everything in. I put a little bit. Let me just put $2 in today. I'm gonna put $2.50 tomorrow. I'm gonna put a couple of in tomorrow. But I understand that every time I buy, I'm buying it cheaper. Now I had taken screenshots of most of the stocks in my public portfolio, which is the My Freedom Money. I'm gonna try to do a live over there, and I'm gonna show you at where I buy, where it is now, and so on and so forth. So this is a long game. Do not panic. If you're retiring money this year and your money is still in there, you need to sue your financial advisor. If your kid is going to college this year and the money is still in the 529 and they didn't make adjustment, sue them. If you just retired and your retirement money went downhill, you should have had 2 or 3 years worth of emergency money just in case the stock market crashed. Right. Because let's say you did everything right and you retired January of 2025 and the market crashed March of 2023. Your fund advisor should have told you need to have a backup plan because you don't know what's going to happen in the next 2 years. So that's why I was to Lisa. I was like, well, girl, what are you talking about? Like, girl, what? What are you saying? Like, I didn't understand what she was saying. Anyways, I love you. Absolutely love you. Please comment below. Check out my channel, My Freedom Money. The book is coming soon. I absolutely love you. Let me know what you think about this. And of course, I know I need to be doing these videos over My Freedom Money, and I will. But since I did that video over here, I just wanted to respond over here. Okay, and I have some other stuff we need to talk about here. We got to get back to dating and marriage and babies and engagements and doing the do's and all this. I love you. Talk to you later. Bye.